guys and girls, it's Nathan here from the B.Invested headquarters, answering some property questions today. People are asking, wouldn't it be better to buy properties once the recession hits than buying them now? Good question. I'll answer that in the most simplistic way that I can. We've been in recession for 24 months. The property market peaked in 2016. Told everyone to be prepared, look out for it, and that I thought it was coming. My peers in the property investing space and property space thought it was crazy. People got angry at the fact that, why are you saying this? You're like, trying to kill the market, are you? And it's like, no, I'm just being factual about what's happening out there in the monetary system, that we're heading into a recession. We've been in a recession for 24 months. Property prices peaked in 2016. They've come down. Property prices, I believe, hit their bottom in June 2019, which is a few months ago now. And we will stay here for a little while. However, property prices may increase soon, they may not. Do I think we're going to head into a boom anytime soon? No, I think probably around the next 24 months, we'll start to see the market pick back up. The reason why I'm predicting the next 24 months is backed on lots of research. The research is just simply calculating the liquidity in the financial system and looking at what levels of stimulus and quantitative easing will need to be done, and seeing that we're going to see negative interest rates, which will help stimulate the economy. We're going to see the lending become easier and more liquidity flow around the system, which will also prop up the market. This will bring on some more confidence in the media and whatnot. Vested interests will push for property prices to go up. However, where is the bottom of the market? Are we in a recession? We've been in a recession for 2 years. So if you're waiting for the recession, we're here, right? What's next in this deflationary recession or depression? I believe we're heading into a depression. We're going to see the stock market it's going to get pumped very shortly. It's going to get pumped. So if you are invested in there, I do look at stocks and shares and I go, shares are good, but just not right now. And this is not financial advice. So, if you need some advice, reach out, speak to us, point in the right direction. But we're in a recession. So if you're waiting for the recession to come, the market's already hit the bottom. We've got stimulus coming into the marketplace, which is going to push up property prices. So if you're waiting for the stock market to fall, when the stock market does fall, the money's going to come out of the stock market. People are going to be like, well, I'll buy properties, they're cheap, and money will go into that market. So, property prices in Sydney, the cheapest properties in Sydney in 2016 around the $350,000 mark. Two-bedroom unit, Western Sydney, Mount Druitt, St Mary's, those sort of areas. You can still buy properties in 2019. These properties have gone down by 20%. Properties in Double Bay, in whatever area in Sydney, has gone down in general, probably about 20% from its peak to trough. So why wouldn't you want to go pick up now whilst things are on sale? That's the first part of it. You can still buy properties, like whether it's in Brisbane, Sydney, whatever. Brisbane, 150, 140 entry prices. In Sydney, 250, 260 entry prices. Looking at the other aspect of it, and this is a very important part, is if you're waiting till the day that the property market takes back off, it depends. Are you looking to buy one property, two properties, three properties, five properties, 10 properties? Are you going to be able to obtain the finance to pick the property up at the lowest point? And this is where I saw a lot of investors just go, oh no, you're talking shit, whatever. And now what we're looking at is people saying, I can't get my equity out. I can't get access to funding. I can't get access to lending. You want to be able to carry assets through this market cycle. That's where the real success is, right? You want to take assets through the market cycle. And at the moment, can you get access to the liquidity? Can you get access to the funding? That's the bigger concern that I'd have. It wouldn't be, are we in a recession? Can we get them cheaper in a recession? Can prices fall still? Obviously, prices can go wherever, but I believe that we're at the lowest end of the market, and the market bottomed in 2019, in June 2019, just as far as I believe that the market peaked in September 2016. And, mark this time, look at it in the future. Did we hit the bottom of the market in June 2019? Only time will tell and common sense will prevail. But you need to, look at this market holistically and understand more parameters than simple like buy, hold, pray mentality that, oh, I'm going to wait until the recession's over, right? Everybody's fearing that, but I can tell you that the market's very different than that, and it operates very differently. Otherwise, I wouldn't have been able to trade through almost 20 years of this sort of market. So, if you need help, defining that strategy, working out whether now is a good time to buy or not, whether you should be selling, whatever it is in your portfolio, feel free to reach out. I'm here, I'm available, my team's here, my team's available. Feel free to reach out to the team. We're able to point you in the right direction and have a look at your position and see if it is the right time for you to be buying. If it isn't the right time for you to be buying, is it the good time for you to be selling? They're all questions you need to be asking yourself. So thanks for reaching out, guys, and keep the questions coming through as a part of the community. We'll catch up soon. Have a great day.